Here terminologies means what are the uses of your business transactions. For example, if you are earning the capital, where you can enter the capital. After total day-to-day transactions, if you want to see whether business is in a profit or else loss, how to check with the help of your trading account, profit and loss account, and also balance sheet. So all those we call this as the terminologies. So in terminologies, first one we can see that capital. Without capital we cannot start our business. So capital is nothing but if you want to earn the money or else if you want to start your business, totally based on the capital. And next one, expenses. Expenses example, purchasing products related to your business, or personal use. And next, income. Example we can see here, cash received or commission received. Means the cash receiving or else check receiving. It may be income, whether cash or else check. And here direct expenses. In expenses and income also we have different types. First here we can see direct expenses. Direct expenses means as per your manufacturing, if you are working in your manufacturing basis, what are the material you required, and total trading related we can see that direct expenses. It is nothing but wages. Example we can see that purchasing of wages, coal or power, fuel, all those. If you want any direct from wherever you are starting your material, in that basis we can select the direct expenses. And same way we can see here direct income also, opposite to direct expenses. Sales. Okay, if you are receiving the wages, money, or else if you are receiving the coal, power, all those can be come under direct income. And here we can see opposite to direct expenses and direct income, this direct expenses and direct income we can enter on the trading account. Those transactions can be entered under trading account, debit and credit. At debit side we can see that all direct expenses, and at credit side all direct income. So these are the total basis. We can say about indirect expenses and indirect income. If you are able to understand indirect expenses and indirect income, it is very easy to understand about direct expenses and direct income also. Here we can see that indirect income, all commission received and stationery received and interest received, cash or check, all those can be entered under profit and loss at debit side and profit and loss account. At debit side we can see all the indirect expenses, and at credit side we can see all the indirect incomes. So these indirect expenses and indirect income has been entered under profit and loss account, both debit and also credit. But opposite to this, we have entered direct expenses under trading account. At credit side all direct income, and at debit side all direct expenses. We have cleared about direct expenses, direct income, indirect expenses and also indirect income. So now we can see here bills payable and also bills receivable. Bills payable, it appears under balance sheet at liabilities, and bills receivable appears under balance sheet at asset side. And here we can see debitor. In accounts, for debitor we call as a sundry debitor. It is also called as sundry debtor. Means customer is the debitor and vendor is the seller is the creditor. Whatever you are purchasing, business can be two types. So in sometimes business can work in a vendor, and sometimes business can work in a customer. Example we can see here. For example, if you want to purchase related to your business, that time you will become as a customer. Okay. In the same way, whatever you are selling the products, that time you will become a vendor. Okay, clear? For that basis, we will call as a sundry debtor and also sundry creditor. Means what the customer who will purchase the goods and services is known as the person who purchase goods and services is known as a sundry debitor. Just we can see here, the person who purchase goods and services for business or for personal use, that time he is known as a sundry debtor, is known as sundry debtor. Creditor. And once again we can see, after completing this sundry debtor, at which side it appears? It may be profit and loss or else balance sheet assets. In profit and loss we can see that whenever he has any bad debts or doubtful debts, that time we can enter at the profit and loss debit side. Okay, and balance sheet assets. We can enter in a balance sheet that doubtful debts and reserve for bad debts we can see later in adjustments. Here it can be entered at balance sheet under assets side. Creditor. Creditor means it is also called as sundry creditors. here the person who sells the goods and services. In debitor we can see the who purchase the goods and services. Examples I will say, for example, if you are you are not a business person, just you are a normal person. If you have purchased some goods, okay, for your personal use, that time you are known as a customer. For example, if you want to sell that books in any books or stationaries in a second hand, that time you are a seller, okay. The person who sells in second, not only in that, if you are selling any product or anything, books or stationaries, you are the vendor at that time. The person who sells goods and services is known as sundry creditor. It can be entered at balance sheet under liabilities. Side. So this can be understood very carefully. Direct expenses, and first we can see here terminologies. Capital means without capital we cannot start our business. That is nothing but how to earn the money. If you are not earning the money, you cannot develop your business, and you cannot purchase any products to your business, and you cannot do anything for yourself or else for a business purpose also. And coming to the expenses, expenses means it may be direct expenses or else it may be indirect expenses. Purchasing products related to your business or else personal use, it may be direct or else indirect expenses. And same way here also. Indirect expenses or indirect income. Sorry, it may be direct expenses or indirect expenses. This is indirect, not indirect expenses. Direct income or direct expenses, direct or indirect income basis. So, and coming to here, direct expenses, purchasing of wages means it is not related to an office, it is related to a factory administrations. Okay, means factory basis. If you are purchasing the materials, and if you as per a finished goods, in that way we can use our direct expenses, and these direct expenses we can enter under trading account at debit side. Okay, direct incomes and also direct expenses. Total trading account can be called as a direct income, and total profit and loss expenses, total profit and loss pro forma has been called as a indirect income. Always business will see about profit and also income, not for expenses and not for a loss. But without expenses we cannot purchase and we cannot earn the income. Without loss we cannot go through our business to a profit. If once in a life, in a business life, if you are any end of the period or end of the year business, always you are earning the profit, what will happen? The owner will be same. owner will be somewhat, he will decrease the purchasing products, all those. If once he get a loss, again he will get up and again he will earn the develop the business, how to attract customers, means technology, he can improve more the technology, what the expenses they required and what are the precautions and what are the requirements as per your customer basis. And coming to the indirect expenses, all those indirect expenses can be understand very easily, depends on your daily basis means small expenses, stationaries, and also if you are purchasing the books and if you are purchasing machineries, plant, land and buildings, all those furniture, traveling expenses, all will come under indirect expenses, which is related to a office, and direct is related to a factory basis. Indirect income, if you are receiving any firm financials income, for example interest, if you are receiving from your friend or from your relatives, from your neighbors, that was nothing else but it is a indirect income. Commission received, all those whatever you are received as per cash or as per check, as per bank transfers, that is indirect income. So these transactions can be entered under profit and loss account at debit side and all indirect expenses at credit side, indirect incomes at credit side, and bills payable and bills receivable. So this all has been appeared under balance sheet at liabilities and also assets. Creditors, here means customer. The person who purchases goods and services is known as a customer. The person who sells the goods and services is known as a vendor. Business will be in two types. Either in some situations it act as a customer and also vendor. Okay, every person, every business and whoever it may be, they will act two types. One is debitor and one is creditor, and that is nothing but customer and also seller. All those types can be entered under this performance, trading account, profit and loss and also balance sheet. So these all are the theoretical part of your accounts. We have learned how to start our business and what are the profits we need to attract and what are the advantages and what are the disadvantages, what is the need of using our accounts, terminologies, concepts, types, all those we have just explained here itself. And now we can see that in which way we can transfer our business accounts as per day-to-day transactions and also all those. Just before explaining accounts here, we can understand what are the payments we need. Means for example, all knows there is only cash and check payments or cash receipts or check receipts. So what are the payment modes or else receiving modes? Just we can see here payment modes. Then payment modes we have here cash payment. First we need to understand about this, after that only we can enter into our accounts. And check payments, bank transfers, NEFT, debit cards, credit cards. With this also we can make the payment. Online transfers, it may be bank transfer same, but if you want NEFT or BDP bill payments, all those can be included in online. So all these are the payment means, and also there is a automatic payment. Automatic payment means, for example, if you are taking any loan and your debit card is included with that bank related, particular day it cuts automatically. If you are due to that bank, if you are due to the particular loan and related to that bank, they will deduct directly from your account. That is nothing but automatic payment. So these are the payment modes: cash payments, check payments, and bank transfers through NEFT banking, debit cards or credit cards, and through ATMs also we can do. That is also included as debit cards, credit cards, online transfers, automatic payments, and nowadays we have different types of transferings. In that basis we can select all the payment modes, and how you are transferring your payment, in that way also we can receive our payments: cash receipt, check receipt, bank receipt, NEFT, debit receipts, credit, all those that come under payment modes. So these all are the information related to business transactions based on accounts. And we can know about what are the debit and credit, in which way we need to post debit and credit, if you will receive the cash or if you are paying the amount. All those, if you want to know, we can see here total basis, and we can know, means if you are receiving the payment or else if you are receiving the cash, if you are receiving the product, furniture, how to enter a debit side and credit side in basis of check payments. First, if you will understand about debit and credit, easily we can post our transactions and we can easily able to understand our theoretical problems. All those we can enter in a debit ones. In trading, what are the transactions to enter? In profit and loss, what are the transactions? How to find out gross profit, how to find out net profit, and balance sheet, liabilities, assets, total can be learned here.